Joining us right now is Bank of America Chairman and CEO Brian Moynihan. And by the way, Bank of America was the best performing bank stock in 2017. It was up by 32%. And Brian, we really appreciate your being here with us today.
My pleasure to be here on a beautiful day. As Joe said, it's really spectacular.
Yeah, we get lucky today. We do.
Weather here.
Yep. Brian, you just came out with your earnings, and the numbers were better than expected. But one slightly weak number was the trading number. It's hit a lot of banks because of the lack of volatility. Your trading revenue was down 34% in fixed income. For the current quarter, we haven't seen a whole lot more volatility. But what's been happening with trading? Can you get us up to date on that?
Well, there's a seasonality to trading that goes on, and as you open a new year, people get back to work, and you see it, and so it's been a bit stronger, but that happens every year. But if you look at it the way we run the trading business, Tom Montag and team, over the last 6 years, our revenues ranged in that business from 12.9 to 13.6 billion in revenue. So it's much more stable than people think, and it comes from our ability to help our issuing clients and our investor clients interact. And so we're not running it to swing for the fences. We're running it to get those singles and doubles, and the team does a great job.
We just talked about Treasury rates, how they've been creeping up a little bit, the 2-year, the 5-year, the 10-year, things really starting to pick up a little bit. And I just wonder what that means for Bank of America, because we've been waiting for higher rates for a long time.
Well, if the rate structure moving up reflects even stronger growth in the economy, and next year we have the U.S. economy to pick up 0.5% to 0.75%, depending on how some of the initiatives you talked about roll through, that's a great thing. If the rates are rising in response to that. If they're rising to stop inflation because there's inflation or other things, that's not so good. But we will benefit technically $3 billion if there's a 100 basis point parallel rise in the curve from year end. 60–70% of it is a short end. That's always been true, but the real thing we benefit by is the general economy, and it's in pretty good shape in the United States, and we projected to grow at 2.7% versus, say, the end this year, low twos.
You know, the IMF just raised their global growth forecast to 3.9%. That was an increase of 0.2 percentage points, and that was based on the U.S. tax law changes because they think that's going to help the global economy overall. We know kind of what it means for Bank of America, but what does it mean for all the companies that you do business with? What do you think it means for the broader economy?
Well, I think the key for tax reform in the U.S. from a corporate perspective and a global perspective was a lower corporate tax rate and a territorial system. So what you remove is some of the incentives to try to move money to figure out where the natural watermark would be for activities. And so companies are going to benefit by that. They're going to have more money to invest. That's one side. And the second thing is they're going to be less about trying to figure out the nuances in tax. Interesting enough, as you talk to CEOs outside the United States even becomes more attractive. We have a ton of workforce, albeit unemployment so low is a question mark in terms of how many we have. We have tremendous energy resources. We have a rule of law around working and employment flexibility. And we have a regulatory environment that's swinging back in. And so what I don't think people see that I've seen but I've been pleased to see so far is not only the U.S. reaction, which you might expect a lower tax rate, but outside the U.S., the view that the U.S. becomes an even more attractive place to manufacture and drive to. And I think that'll help the U.S. economy. When the U.S. economy goes, because of its size and because of the consumer side of it, that lifts a lot of boats. And so I think it'll be good for overall for the world.
What do you think about the small businesses that you've seen? I know it's very early days, but have you seen any increased demand for either loans or for capital expenditure, for trying to find some way to do it?
We've been doing sort of successive record quarters of origination of small mid-sized businesses. It's been very, very strong. I think small businesses tend to have looked the last several years in policy of being a bit working against them. If you go back to leave aside the policy involved, but the implementation of the Affordable Care Act and some of the other things caused them to slow down and to rethink their business models. What has happened with the regulatory move plus the tax reform is you've taken away a lot of uncertainty, so they'll be more aggressive. It's only a month, so you got to be careful overstating it. But if they tell you they're going to do it, and let's say they're 5%, 10% more aggressive in terms of investment, that's a big difference when you take across our 2 million small business customers and our 200,000 sort of mid-sized business customers. Just think of each of them being slightly more aggressive and how that flywheel just keeps turning and generating activity.
What do you make of all the companies that announced, including, by the way, the parent company of this network, Comcast, announcing right after the tax reform plan to give these one-time bonuses? What do you think that is about?
Well, we did it as part of the shared success with our teammates. And so when we think about driving responsible growth at Bank of America, we think about being sustainable, wanted to be the best place for teammates to work. And when the company receives a benefit like that, we thought it was important to show the teammates that we share the success with. It's one part of what we've done. in terms of healthcare benefits that we've changed and lowered the costs for our lower paid people. We've done a lot of work around it. So it's one component of that. But I think it was a good sign that, hey, we received a benefit, you should share in it. It's that simple. And, we'll continue to use the tax savings to invest in the company and continue to drive things as well as share with the shareholders.
But was it driven from an economic perspective?
It was driven by, you received a benefit, and I thought it was important to share that with the teammates. And believe me, if you got the emails I got from the teammates and how excited they were to get it on Christmas week in their payroll and time to spend it, it was a tremendous thing.
Let's talk a little bit more about the consumer. I know consumer was very strong. I heard what you said about through the holiday shopping season, the strength that was there. But I also read a report yesterday that suggested that consumer bad debt was up by about 20% in the credit cards for 4 major banks, including yours. What does that mean? Or should we be worried about it?
Let's think about two different things. The spending, if you think from 15 to 16 and 16 to 17 for the year, the spending on debit, credit cards, checks written, cash, everything at Bank of America was up 3%, 15 to 16, was up 6%, 16 to 17. And think about, that difference as being across $2.6 trillion of spending. Yeah. And so that is a lot of things. So consumers are outspending. Interesting enough, you hear a lot about retail sales and stuff. There's a lot of spending on experiences and eating and traveling and stuff that's picked up. So the spending is very good. On the credit card pickup, we're at a very low base. So we always have a little bit pickup in the fourth quarter, but we went from, 2.6 to 2.8 or something like that. These are numbers. We used to underwrite to 5.5% in good times of losses. We're now in good times experiencing 0.5%. Under stress, we only get to that level. So the conservativeness of us and our colleagues in the industry on underwriting will hold this in check. So, and it should. And so I think the increases off a dead cat balance level are expected, and now we'll see that turn back down as we get through the seasonality. And on top of that, as you continue to grow the receivables, you'll see it in good shape. So consumer credit's in pretty good shape in the United States.
Closed a lot of branches, yep. Brian. Mine got closed. It's okay. It's all right, but in a lot of areas.
A technology giant like you would probably have.
Yes, exactly. I never use cash. I use. What do I use?
Bitcoin.
Venmo or something?
You ought to be using Zelle. You ought to be using Zelle.
Bitcoin through my Venmo, through my PayPal or something. No, but that's a change in strategy a little bit, isn't it? I mean, Bank of America. There should be one on every, should be like Starbucks, Bank of Starbucks.
Well, the thing is that as much as at the peak we had maybe 6,100 branches, and we sold about 500 or 700 to smaller banks that could get the consolidation benefits, do things, and we closed some. But it was all based on customer behavior and customer flows. But the reality is in that time, last year we rehabbed 300 or 400 branches. We built about 50 or 100 new. Over the next few years, we'll be 300 or 400 new. We'll go into cities like Minneapolis and Denver that we've never been in. We've gone from 150th market position to like 8th in those cities already, just starting off. And so we're bringing our service and capabilities. There's 7 or 8 large cities in the top 50 in the U.S. we're not in. We'll be building branches. So it's a very complex distribution strategy that with a change in behavior, if I were a retailer, you'd be telling me, what are you going to do about online sales? Well, we got after this 10 years ago. And so we've seen the change in customer behavior. And it's critically important to be able to do everything every way with the customers. We have 1 million people come to our branches every day. We have to serve them well. We have 35 million digital customers.
That's unbelievable. All served by one teller.
We've got 60,000 teammates. 60,000 teammates in the retail system. Yeah, 25,000
teller left.
Thank you, Brian.
Yeah, it's great having you here. We really appreciate your time today.
Thank you. Enjoy your Davos.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.